Welcome everyone to the next video in our series. I'm Aaron. Welcome to my YouTube channel. If you haven't already, just a precursor before we get stuck into anything, check out some of the videos that I've already put up all about investing just for beginner investors or people who are looking to get started in the markets. Now, today's video, I thought I'd put a little bit out there. Some people learn best by examples. I know I'm definitely one of those people, and that's how I learn. So what I wanted to do is put together a video about what I have in my portfolio, and then hopefully you guys could use some of those principles that maybe we'll talk about and then make your own investment decisions behind that. So I started my investment journey in January of 2020. So I invested probably at the height of the market, which means that when the market crashed in around about March of 2020, my portfolio saw negatives of around about sort of 15 to 20%. Now, before I got into investing, I kind of identified a philosophy for myself, what my goals were, and they were all sort of long-term goals. I wasn't looking to day trade or make quick money and get out. I just wanted to buy some really solid foundations and during that time just learn about the market and help to get a better understanding about what investing really was. So I just simply held on to what I bought. I made no sales, and my shares, I guess, continued to try and track back over time. So even making some more purchases during the really down points of that time in the market so that I could get some really good prices of the stocks that I already bought or was interested anyway at the time. So my investing has a bit more of an approach that we call a core or satellite approach. So the core part of the portfolio is just broad-based ETFs. And if you haven't seen already, check my video out on ETFs that's linked in the channel here. And they just track the market in different sectors. So that was the broad part of the core portfolio. Then the satellite part of the portfolio is something that I'm working on currently. And I'm trying to pick around about sort of 3 to 5 individual stocks which have a greater chance of return that I'm interested in owning long-term, still long-term mindset with the potential to grow a little bit more significantly. So let's take a look at my portfolio that I have here. So I'll pull up the graphic and you guys can look over it as well so you get a bit of an understanding. But the most part of my portfolio is what we call NDQ. So NDQ is a really heavy tech stock that tracks the NASDAQ 100. So it's an ETF and all it has in it, it's 23.9% of my portfolio, as you can see from the pie chart here. It has Apple, Microsoft, Amazon, Tesla, all of the technology and consumer discretionary stocks involved in it. So if you've got a bit of an understanding into what an ETF actually is, I have a really small piece of these companies inside of the global NDQ ETF itself. So NDQ makes up the biggest portion of my portfolio, and that's where I allocated a lot of my funds as well. Then outside of that, the next biggest part of my portfolio, 23.1% of it is WDIV. Now, this is a ETF, again, that tracks the S&P 500 and more specifically, the really high dividend yield companies inside of it, okay? So it tracks an index called the S&P Global High Dividend Yield Index, and that has companies like Lenovo, Nokian Tires, I think that's how it's pronounced, Northland Power, and it's more of a financial sector, so it has a lot of the global financial sectors inside of that, as well as utilities and real estate. Now, when we look at broadening or diversifying in the market, we want to look at not only the sectors that we're choosing, but also the countries that they're involved in. Because if you had all your money in one country, let's say it's the US, and the US tanked, then your money is going to be opened up to potentially being negative in that sort of instance. So you want to be able to get your money across different parts of your portfolio, across different countries, across the world. So that WDIV, that's heavily based in the United States, but also Canada, Japan, Hong Kong, and emerging markets. So it's got a very big spread across lots of different sectors. VAS, which is the next one. Now, VAS tracks the S&P ASX 300, so top 300 companies. It includes sectors more based around finances, materials, and healthcares. So the big companies that make up that ETF are Commonwealth Bank, BHP, CSL, NAB, Westpac, and ANZ. Then outside of that, there's VSO. So these are all part of my core portfolio. VSO tracks the Australian shares small cap index with things that cover materials, consumer discretionary inside of Australia, and industrials. So this has the Charter Hall Group, Atlas Arteria, I'm not sure that one, Oz Minerals, which is a minerals mining company, Boral, JB Hi-Fi, and all of the sort of key consumer discretionary groups that you'd probably recognize. The last part of it is PM Gold. Now, PM Gold is designed to track the international price of gold in Australian dollars and offers investors a simple, low-cost way to access returns on gold. So it's always great to, when we diversify, not only are we diversifying across sectors, countries, but also asset classes. So gold is an asset class that's retained its value for a very long time and should make up some percentage of a portfolio because of its inverse relationship. If the market crashes, which it did in March, gold prices would rise, and that would sort of even out any sort of negatives you would experience. And the same to be, if stocks really rise, then gold takes a bit of a hit. So for my gold, it's actually taken a bit of a hit and it's kind of dragging my portfolio down. But what I'll do is over time, I'll just dollar cost average into that. When the market is really bad, I'll buy some more gold, or I'll keep my gold and it will rise. When the market's good, I'll buy in some more, and so on and so forth, just so that slowly gains over time. And PM Gold is one of the, I think the only two inside of Australia which you can buy. So it's the Perth Mint, and actually, if you wanted to go in and cash that in, you could actually get physical gold for your ownership of that stock as well. So the Perth Mint will allow that if you go in and trade that. But there's another one on the ASX called just gold, and that covers like a broader ETF of gold as well. So that is the makeup of my portfolio, and I'm slowly working on being able to get that satellite part running. So the first part of the satellite was my purchase of Sunrise Group, which is the SGLLV. And then from here, I'm just going to make some small purchases into other satellite companies, individual investments, but then the majority will be just chipping into NDQ, WDRV, VAS, VSO, and perhaps reducing my position in gold to maybe 5%. So thanks for tuning in, guys. Hopefully it gives you a little bit of an understanding as to how you would go about structuring your portfolio yourself, and why some of the buys that I made might possibly be the same for you. You can look into those, and if you wanted to structure your portfolio in a similar way, then hopefully you get some really great returns. So thanks for watching the video today, guys. Check out my channel for more videos on finance. Some of the videos that are linked in this video already, you can check those out and hopefully give you a better understanding as to how to go about your financial journey. Thanks, guys.